India has been seeing 12 to 15% kind of profit growth. From here on, if globally equity market doesn't look good, let's say emerging market is not looking good, but within emerging market India is looking good, then these things can start to turn positive. First 6 months, whatever international chaos is happening, it has nothing to do with India, but India will be a casualty of what is happening. At the end of the day, people who are creating those softwares or artificial intelligence related tools, if they are not able to monetize it through proper, today market is flooded with excitement that AI will take over. So far what we have seen is technology is wow, but technology wow has to come with a cost or with a price where we are accepting that technology. So I'll try to keep it very free flowing. Apart from that, we can also discuss what kind of sectors are looking attractive. Um, but I thought I'll draw your attention to what has happened in past 2 years, or when there is a lot of chaos, and then one goes into a silo, what to expect, or probably there are a lot of doubts which seeps into our mind, how to come out of it. So what we do is, typically when there is a lot of confusion, you go back to past data and you say, had this happened in past, and if I had invested at that point of time, what kind of return I would have expected once things starts to normalize. So what we did is, this is like a valuation band. The red line that you are seeing, it is combination or mixture of all the valuation parameters, be it price to earnings, PE, or be it EV by EBITDA or price to book. We have taken combination of everything. So simple average, just एवरी ईयर का जो भी वैल्यूएशन है चारों को एवरेज को मिक्स कर दिया एंड मेक अ बैंड आउट ऑफ इट. And the black line that you are seeing, had I invested, let's say for example, had I invested in Jan 2024, 1 year later what I got return, that is in Jan 2025, is plotted in black line. So it is like predicting the future, but ये पास्ट में हो चुका है. वी आर जस्ट ट्राइंग टू एंटिसिपेट, इफ आई हैड डन दिस तो क्या मिलता था. So red line, if you see, it gives you an indication whenever the valuations were to go on the higher side, the returns that you got, because ये 12 महीने आगे चल रहा है. So had I invested here, जो 12 महीने आगे का रिटर्न है, this is what I would have got. But when valuation starts to normalize, the return starts to also inch upwards. And typically these are like zero return kind of zone. Whenever we are investing, we definitely want to make some returns. Zero is not something that we are happy with. Double digit return we are good with. I think we are getting into a zone where this return trajectory will start to improve. How far we are away, difficult to say, but the kind of chaos today we are in with regard to lot of moving parts, maybe on international basis, those are ideal scenario where chaos happens. Market goes through certain bit of turbulence, certain bit of nervousness. This valuation probably can come down, but that becomes the zone where you want to participate and you want to make good returns out of it over a period of next 12 months. So this chart is indicating that more or less we are in that trajectory where things can start to improve. So we are not in a bad phase, but if we were to keep faith and were to start participating, this is a decent trajectory to start with. Another part is valuations. We saw in the previous chart, you're seeing this peakish valuation. All peakish valuations have happened. All valuations had gone to a level where it were slightly on the uncomfortable zone. If numbers or the earnings growth don't come, then they were to correct. What we have seen in last maybe 18 months, there has been consolidation, जहाँ पे numbers, earnings growth have been coming. It is not that India has seen zero profit growth. India has been seeing 12 to 15% kind of profit growth, but market has not gone anywhere. So what happens, automatically this line starts to come down and we are closer towards mean. From here on, if it goes down, definitely in past history it has always bounced back. But are we in a zone jahan se if things were to go down, we'll only make loss? Answer was yes over here. यहाँ पे we are in a zone where we can start consolidating or start building up our portfolio, because if this event happens, it will be very fast and it will bounce back. Maybe we'll get 6 months to maximum 12 months, maximum 12. I think 6 months के अंदर market starts to again come back, because these are all panic situations. These panic situations, they don't long last. It is there to just get rid of weak hands, and again market bounces back. So this is where I think, previous chart mein where we saw, returns more or less can start to look good from here on, or the positive trajectory can start. Same is on the valuations, where things have started to now normalize. This is what our most investor would have faced. Now, what is this? This is weighted average NAV of equity oriented mutual fund. जितने भी market में schemes है, we have taken an weighted average of those schemes, and this is from August 2000. If this is long history, but if one were to see the red line, which is the NAV, let's say if NAV is 12 2 years back, and if today also it's 12, that means we have made zero returns out of it. This red is almost indicating that we have not made good returns out of it. ये flat है, but in previous chart what we saw, valuations have corrected. That means earnings growth have gone up, valuations have come down, because of which we have not made returns. Now these valuations can always go back if we get more confidence that global chaos has started to come down. India will again start reporting strong profit growth the way it was doing 15% for all kind of sectors, or mostly all kind of companies, large, mid, small kind of combinations. Today where we are nervous about certain sectors, we are nervous about certain market caps, because of which the valuations have come down. So this definitely will start to emerge good, or will start to improve. One is by default earnings growth जो भी आएगा वो तो equity returns देता ही है. Second, there is a possibility of valuations also to improve once the visibility, earnings visibility starts to improve. This chart probably we would all have heard, FIs are selling, FIs are selling. When is market going to revive? Long history, FIs have sold $13 billion over here, $5 billion, $17 billion, $19 billion. Have they done it regularly with that kind of magnitude of sale from India on continuous basis? एक बार यहाँ पे बेचा, फॉलो अप नहीं हुआ, यहाँ पे बेचा, फॉलो अप नहीं हुआ, मतलब it has gone positive. Same is here. This was minor, this is the major one. Post 2025, 26 has just started. We are seeing small numbers, we are not seeing big drawdown. More or less, I would say we are in that trajectory where FIs, whatever anticipation they were carrying in terms of India's valuations are high, or probably will get a weak mandate from this government in terms of running the country, or probably earnings can slow down. Everything probably would have got factored in here. From here on, if globally equity market doesn't look good, let's say emerging market is not looking good, but within emerging market India is looking good, then these things can start to turn positive. So I would say worst of FI kind of whatever journey we have seen is there. It can probably now improve, because in past it has never seen drawdown for 2 consecutive years. So I'm hopeful that first 6 months, whatever international chaos is happening, it has nothing to do with India, but India will be a casualty of what is happening. Let's say, for example, if artificial intelligence is a bubble, we are all made to believe, artificial intelligence will take a lot of job, X, Y, Z. But end of the day, people who are creating those softwares or artificial intelligence related tools, if they are not able to monetize it through proper sales, right? They need to do sales out of it. If they're not in position to do that, then what ultimately happens, because they are already sitting on large bit of cost, they're not making money, they'll shut it down. So today market is flooded with excitement that AI will take over, but it will come at a cost, and that cost has to be good enough that it is at least cheaper than human cost. If it is not cheaper than human cost, then it will automatically see a lower acceptance, and probably the bubble, or why would I say bubble? Because so far what we have seen is technology is wow, but technology wow has to come with a cost or with a price where we are accepting that technology. Right now, there is limited clarity how they will monetize and will accept that technology. Hence, probably valuations are right now without majority clarity on earnings. एक बार earnings की clarity आएगी तो उसके ऊपर हम कहते हैं ना 50p, 30p, 20p. Right now earnings की clarity limited है, hence it is right now in a bubble zone. Second, right now till 2 months back we were not seeing crude to surpass 70. Today we are at $82. India is very comfortable with $60-65. The moment we start to cross 70-75, there is bit of nervousness. Now this definitely from economics point of view, जो हमारा current account deficit है, it spoils it. Now although economics है, but let's make it simple. जब भी current account deficit होता है, that means जितना हम बाहर से foreign exchange कमा रहे हैं उससे ज़्यादा हमें payment करनी है. So if we have to pay more, definitely हमारी currency की strength weak हो जाती है. That is where 90 rupee to a dollar has become 92 in last 3-4 days. At best, probably not sure where crude will stabilize, but the way economics is or the global geopolitics is shaping up, there are two parts to it. The strongest country today who is dominating wants to corner in maximum assets so that if you want to buy crude you have to pay in dollar. So dollar which was looking weak a year back or 6 months back will now see an acceptance. So that's also a game theory. Second is there is so much of crude which is available. Why do crude price have to go up? But Middle East is saying that at a certain price we may not be comfortable. So there is an element of crude price to go up, which I don't know where it will settle down. Probably maybe at 70-75, wherever it settles. If it goes beyond 100, I think it is going to be a tough moment where India will have to re-strategize its cost structure. Somewhere around 70-75 is not a big problem for India to readjust its cost structure. So if crude stays elevated and if we see a lot of current account deficit, then FIIs will say, अगर हम आज इंडिया में जाएंगे, we will give them $1 and we'll get 92 as an INR and we'll invest in India. But if we'll go after 6 months, we'll give $1 to RBI and we'll get 95 as an INR. So we are having 3 rupees more to invest. So that is where wait and then approach to Indian market, that kind of event can happen if crude stays elevated for a long period of time. But I think globally, because of lot of chaos, FIIs would have also slowly come to a zone जहाँ पे they will find it difficult to identify where is the good asset to go and invest. So in interim we had China as an emerging market. In interim we had gold and silver as an opportunity or an asset class where you would have invested. Today those optionalities are limited. They are only coming down. So maybe 6 months down the line or again a year, India can come back. This I am just slightly highlighting sectors which are trading lower than their past 10-year average. Banks, both private and PSUs, are looking comfortable. Consumer, that is FMCG, is looking bit of comfortable. Media, halaki media, there are not many companies. Real estate is down, but real estate has a bigger problem to resolve where there is loss of confidence. If AI has to take jobs, then probably people who are buying new house will also want to wait out. So that confidence has to come back. Retail and technology are looking comfortable on valuation. So there are few sectors out of this 15-20 names. There are some 5-6 names which are emerging where valuations have started to become more comfortable. If we see more 50% more names coming in that zone, I think market will start to look more and more attractive. Today it is partly attractive. This is again classical PE ratio and growth. Now PE ratio has to follow growth. Yellow line is PE and blue is growth. If growth is superior, PE will also go up. That means we all want to buy that asset. We are willing to pay higher price. But PE is right now here and growth has come down. This is for Nifty. This growth has to again slightly surge back. 10 or probably 9 to 10% is the growth that we are seeing, and valuation is around 19 times. We are almost at 2 peg. 19 divided by 9, roughly 2 is the answer. And it's slightly higher. If it comes closer towards 18, and if this growth starts to move up, let's say instead of 9 it goes to 11 or 12, then that gap will come down. Now, can this growth go back up? Joker in the pack is oil and gas companies, because if crude starts to go up, oil and gas companies starts to report better numbers because they are exploring gas. So if they start, crude oil, so they'll start to make more money, and this Nifty has a lot of weight which comes from oil and gas, and growth will start to move up. So there is a hope that the valuations which have started to correct, even earnings can start to improve. This is for Nifty, where there is hope that oil and gas, because Nifty large cap has oil and gas, rest mid cap and small cap is very small portion which is coming from oil and gas. This has a bigger portion which is coming in from oil and gas. Too technical, but I'm indicating, large cap is relatively still having a bit of legroom versus the other two space if there is a positive environment even today. आज तो सब chaos ही दिख रहा है, but ये chaos में भी positive कहाँ पे है? So I think large cap has that scope to explore. Mid cap, I think earnings growth around 20-22%, valuations at 26. It has started to come down. It has still some scope to normalize. I think 10% more correction and things can start looking better from where we are today on mid cap basis. One part which is not comfortable is growth rate, which has started to slow down in small cap. Can it start to slow down in mid cap as well? Large cap, what we saw 10% growth, it is already lower. Mid cap, what we saw 20-22% kind of growth rate. In case of small cap, the quarter which has gone by, growth was around 10% for small cap. Valuation is at 20. Can it come down? Answer is yes. But small cap is a very vast pool. Small cap का एक ही benefit है, it is small cap as a category has infinite number of stocks, like large cap 0 to 100, mid cap 101 to 250, while small cap is 251 onwards. तो वहाँ पे you will have to keep digging bottom up ideas, like we will have to keep digging bottom up ideas, and optionality will emerge. So small cap is more bottom up approach. I would say part pain which small cap has to show is there. Next 6 months mein this full pain would be visible because earnings have slowed down, so valuations will keep readjusting, and this will be a phase where one can start building portfolio from next 3 to 5 year perspective in small cap. I think small cap as a bottom up ideas will always stay as bottom up ideas, but valuations which had gone way high, it has started to correct, and probably at 18 kind of zone, which is at 22, which will happen over next 6 months if they stay where they are, and plus 5-10% correction, then this looks very attractive going forward. So large cap, I would say pain point is lower. Mid cap, earnings related clarity, if at all there is any slowdown, that is still not there. Valuations have started to come down in mid cap. In case of small cap, valuations have started to come down, but earnings growth, we all know where it is right now, and there is limited negative surprise, or probably bottom up ideas have started to emerge. Today, I would be comfortable with 20% of the name in small cap to construct my portfolio. The moment it comes closer towards 60 name, जैसे मुझे 50 stock का एक portfolio बनाना है, I would be comfortable with 10 name or 12 name today. The moment I am closer towards 30 names, that's where a strong portfolio starts to emerge. So this is a process, or it's a journey which will start to emerge in next 3 to 6 months. Why 3 to 6 months? Because a lot of chaos which is happening on global level. Uh, in last 1 month, we would have forgotten that India had tariff related challenge. In last 1 month, we are only talking about war. In next 1 month, we'll be only talking about crude oil. So this, narrative which is continuously changing, it is very difficult to construct a portfolio if things are changing very sharply. But over a period of time, not everything will be negative, not everything will be positive. It will converge, it will stabilize, and economy will readjust, which I think this phase is going to happen in next 6 months, and hence everything will start to emerge better from where we are today. That's how I am looking at things. So that's predominantly on where we are in terms of market. Uh, equity market goes through a correction. Typically, if there is 8 year of market cycle, 5 to 6 years are very good, or maybe 7 years are good, wherein certain years are stagnation and certain years are strong positive returns. Aggregate basis पे 8 9 years पे you make 15% as CAGR return. But many forget to also say, there are also 2 or 3 years which are bad in that 8 to 9 years. उसके बाद ही next cycle start होती है. So when this 2 years or 3 years which are bad, what happens? So typically there are three phases of correction. First phase of correction is where euphoria gets knocked down. If you remember, around June 2024, when this government got re-elected, it came with a weaker mandate versus what was expected out of them in terms of number of seats. So slightly weaker mandate, obviously FIs get a bit jittery, how the policy framework will work. But which was a sector which was widely accepted that nothing can go wrong at that point of time. Any guess? मतलब आपने अगर वो नाम लगा लिया आपके कंपनी के आगे, तो that stock is up by 50% in a month. Any theme or any sector that you can recall? PSU, power, defense. These three themes were going berserk. You just need to use name as I am participating in defense. That stock will be up by 50% in a month. If you were a PSU name and you were not known, then probably in next 1 month you will be up by 50% or 100% because there is a value which is sitting in that name. Power, because in next 10 years India is going to need a lot of power. So any power opportunity as a listed space would go up by 100% in a span of 2-3 months. So those euphoria was going into the market in that phase. Post weaker mandate, that euphoria got corrected. जो जून से लेके सितंबर या नवंबर तक का करेक्शन आया, फर्स्ट फेज ऑफ करेक्शन था वेयर यूफोरिया गेट्स करेक्टेड. एवरी टाइम whenever correction happens, जो सबसे ज़्यादा चलता है उसमें करेक्शन आता है. And this was the first phase. Now it is not always that post first phase second phase happens, but very rarely, which is after 7-8 years, this happens where second phase gets followed up. So this is where our antenna has to say, if it is a second phase, then probably this is a long drawn correction that we are entering into. Second phase of correction is very fast, very brutal. Everybody's portfolio is ready. This is somewhere between December 24 to March 25, where you just name it and everybody's portfolio, every scheme, large, mid, small, every sector was in red. What happens there afterwards? Every portfolio manager is confused. Whatever ideas we bought, probably we would have bought because of right reason, but maybe the valuations were wrong, or probably we would have chased it as a part of our momentum build-up to get extra return. So what we do is typically we readjust our portfolio. So after second phase of correction, where we have got brutally impacted, we say, let's sit down, let's rectify our portfolio. So वहाँ से शुरू होता है consolidation, which is phase 2 or you can say 2.5. if you would have noticed, मार्च से लेके अक्टूबर या दिसंबर तक market was either up or down, but you are still looking positive and you were happy with the market or probably not too much grumpy about the market. Now, this consolidation phase is where everyday portfolio manager as aggregate universe is wanting to get rid of certain names which they were not comfortable and wanted to buy something which they are comfortable with, where they are sure about the outcome. So this is where market was going zigzag. Post December, the next set of excitement or certain degree of negative news flow starts to come in, where tariff, where international geopolitics like war or crude oil. Third phase is typically something which is out of your control, and that is the time where you need to be constructive in your mind that this third phase, which is out of your control, will not last forever. But it will be brutal, it will be very fast, and you need to be ready so that you can participate and benefit, because जब वो नीचे गिरता है, so had you bought at let's say 0, you would have made 0 plus 15% return. If that 0 has become minus 10, then you are participating at minus 10, then you are talking about return minus 10 to positive 15, maybe 25% kind of return. So you want to be ready, having dry powder which can capture this downfall which is driven by a third party or something which is beyond your control. कोविड में ऐसा हुआ, ग्लोबल फाइनेंशियल क्राइसिस में वैसा हुआ 2008 में, and same is what we are going to see, or probably we are seeing as we speak in last 2 months, where market is correcting very fast and we are confused. And it has nothing to do with internal company's problem or internal policy problem. It is more to do with external problem, external environment. This phase will stay for a certain degree of time and it will go down and probably things will start to emerge. But third phase is the last phase of correction, and then new cycle typically emerges, which stays for 6 to 7 years, where first 2-3 years are low in terms of equity outcome, but they are very fast, maybe at third, fourth, fifth year in terms of equity outcome, and then again the phase of correction happens. Like return starts to go up and again it falls down. Aggregate basis for what we get is 14 to 15% return. So I strongly believe we are part of the phase 3 right now, what we are seeing, and it will last for a certain number of months till the global rationality seeps in, and then probably we'll start to aggressively look forward for positive return journey from there on. So that's what we are going to see through. For people who would have not lived through those phase 1, phase 2 and phase 3, I thought I'll just give you a glimpse of it so that you are comfortable. What you have seen, you can correlate, it has happened in past. It typically gets repeated in a different music, but it gets repeated, and the outcomes are here to see, because in last 20 years economy has gone up, so would be the equity outcome over a period of time. One theme which I'm very comfortable with, but there is a lot of leap of faith that one has to take, I think, is infrastructure. Last 2 years, there has been limited growth in terms of order book for those infrastructure companies. Valuations have come down sharply. Balance sheets are looking good, healthy. Last time when I saw, order book which had come down was in 2010, but wo time pe balance sheets were completely in bad shape. Most company had run a risk of going bankrupt. Today, as we speak, most companies are in same position. Balance sheet is completely clean and stable, and as we speak, government is trying to rectify a lot of policy framework. It is trying to get companies skin in the game by increasing the amount of equity participation if they were to win the order and were to build a road or government project. So when this kind of event happens, small companies, they're out of picture. Mid and large companies starts to come back because they need to pour in balance sheet and need to win order. Most mid-sized companies would be part of the listed pool, if one were to say, on aggregate basis. So hence the hope is that as and when the order bidding starts or order offering starts, they will start to participate. Now, when will it start? NHAI, which is National Highway Authority of India, In last 2 years, it had gone through a lot of balance sheet rejig. It was carrying a lot of loan. It had brought down its loan from 3.5 lakh crore to 2.5 lakh crore. Now it is in good shape to give more order and allow people to participate. Plus, there is government mandate in next 5 years. They'll have to sell lot of road assets. जब road assets बिकते तो पैसा आएगा. NHI के पास पैसा आएगा तो again they'll be able to bring down that debt and again they'll be in position to offer more orders. So this cycle, I think we are in a zone where there is unknown that when government will start to give order, but we'll have to keep in faith. Companies are in good shape in terms of balance sheet, and whenever there is an order which is available, it will come very fast, and so would be the journey for these infrastructure companies. And in next 5 years, 10 years, I think India will have to again go through those massive infrastructure creation phase. Another space which I think is looking attractive but has smaller sectors which will keep emerging good and will keep throwing up returns in bits and pieces is consumption. Consumption, again, India is largely going through a demographic change where per capita income is surpassing $2,500. The moment we cross $2,000, typically there is a lot of demand for discretionary spend. Discretionary spend might comes as tourism. You all people would love to travel once a year, right? Gone are those days जहाँ पे 4-5 साल में एक बार travel करते थे, 10 days की छुट्टी या international holidays. We now want to at least travel for 5-day vacation, 10-day vacation once a year. That is going to be a theme. QSR space, real estate space. These are all part of consumption theme which are going to stay. However, there will be cycles. Like there are maybe 15 sectors within consumption which are aggregate basis helping to create definition of consumption. तो उसमें ज़रूरी नहीं है कि 15 के 15 एक साथ will participate in the journey. There will be 5 sectors which will participate this year. Probably next year there will be another 2-3 sectors which will participate. So there will be few sectors which will participate, few will turn down, few will participate, few will turn down. But on aggregate basis, consumption theme will keep getting stronger and stronger in next 10 years on overall India basis. So infra theme, I'm very much positive because market is neglecting, but I don't know what period of time order book and profitability will start to shape up. I think the ground level foundation is getting stronger for them to be prepared for that kind of journey. In case of consumption, I am seeing already the outcome, but valuations are slightly on the higher end. As and when this valuation starts to correct, again the next round of journey to participate will come into play and will try to benefit out of this journey. So these two themes, I think, will continue to stay elevated, will continue to stay on course for India for next 5 to 10 years at least. Apart from that, on cap bias, as we had discussed, large cap looks promising in terms of their outcome. However, large cap is more a relative basket approach. Where we are comfortable is small cap, where in next 6 months we want to positively construct our portfolio. Large cap, at least I am sure that the drawdowns will be limited. Instead of going on aggressive portfolio, if I am not comfortable with market, then I'll go with large cap. If I am comfortable with 3 to 5 year horizon, then flexi and multi is flexi cap and multi cap is the category which I want to explore, because this is where I'll be able to oscillate between large, mid and small and try to benefit out of whatever opportunities are available. So this is how I'm broadly thinking about how the markets are where we are. Healthcare is looking promising, but healthcare mein there are different verticals. Hospital is not looking so attractive on valuations, but traditional manufacturing companies like Soft, Cipla, Sun, Dr. Reddy, not exactly the names, but that kind of silo is looking slightly better versus a year back. IT, not completely sure, would allow AI to completely settle down and then take a more stronger approach. However, from dividend yield perspective, they are in a zone जहाँ से things can turn positive, but foundation is not very much clear that we want to be positive or not. Yeah, broadly. Banks are looking fine, no problem. It is only that valuations have recently caught on. So you want them to cool off a bit and again then want to participate. Small sectors which were looking very optimistic 12 months back, like capital goods or capital markets or hospitals, those micro sectors which are not exactly the theme that a fund would run, but those were somewhere you wanted to participate aggressively and you would have made return on aggregate portfolio. I think that's where those kind of sectors are in slightly overheated zone, and one would like to have a very measured approach in terms of going in that zone. Would be more calibrated there. That's it.